Hello everyone. So today we will be talking about the taxation system of India. But before that, let's understand what is tax. Tax is the money that people have to pay to the government, which is used to provide public services. It is not a voluntary payment or a donation, but has to be compulsorily paid. There are two types of taxation system: direct tax and indirect tax. Indirect tax comprises of GST, goods and service tax, and custom duty. And direct tax comprises of income tax. Direct tax is progressive in nature, which means that an individual or a organization will pay according to their income. If you are a salaried person and you are having 10 lakh, 20 lakh, 50 lakh income per annum, you need to pay according to the tax slab. It's not the same for every person. So that's the reason it's said as progressive in nature. You pay according to your income. And the incidence is borne by the taxpayer itself. In direct tax, it's not transferred. But in case of indirect tax, the tax is transferred. Tax is ultimately borne by the consumers. Indirect tax is regressive in nature. Means irrespective of your income, you need to bear the tax. You need to pay. Like, you are not paying directly to the government, but you are paying to the manufacturer or the supplier of the goods or the service provider, and they will be paying to the government, but we the consumers need to bear it irrespective of anything. Suppose you purchase a good, it comes inclusive of GST, right? So the seller of the goods will be paying the government the taxation part, the GST part, but we the consumers are not paying directly to the government, but we are the consumers, so we need to bear the tax and we need to pay the amount inclusive of tax. Let's understand the concept of GST. GST is a value-added tax levied on supply, that is manufacture or supply of goods or the provision of services. It provides a continuous chain of credits, and the ultimate tax is borne by the consumers, and the chain, the distributor, the retailer, the manufacturer. From the manufacturer it goes to the distributor sells it to the retailer. So this is a chain. So the distributor can take the input tax credit, retailer too can take the input tax credit, but the consumer like us, we cannot take. We are the consumers, we need to bear this tax. But there is no cascading effect here, because the distributor and the retailer can claim input tax credit on the purchases they have made. So there is a transparency, and the ultimate consumer bears irrespective of whatever their income is, we need to pay the tax. So now let's take this example of the manufacturer, the distributor, retailer and the consumer. The manufacturer's cost is 100, then the GST part is 18, total it comes to 118. As he is the manufacturer, he has no ITC, he pays to the government 18, value addition is 100 and the GST part is. He sells it to the distributor. The cost comes to 100 and he adds his own profit 15, total it comes to 115. So GST on this 115 is 21 approx, and the ITC he paid is 18. So he has to pay to the government only 3. He claims the input tax credit here 18. The value added is 115 and the GST part 21. Likewise, retailer's costing is this, and he adds a profit of 18, and the same procedure will follow. Ultimately, the consumer has to bear. He cannot claim any input tax credit. He has to totally bear the product cost inclusive of GST. I hope you all understood this part. I'll come up with more examples and will explain you all in detail.